But nowadays, you can invest as little as $50 and you get a small piece of ownership into the company. Now, again, for $50, you're probably getting like tiny amount. However, I look at it like it's a great way to learn. It's a great way to learn and not have to put up, tens of thousands of dollars or whatever it is in order to invest in a company.
Welcome to the Worthy for 30 podcast. I am your host, Eric Tash. Join us as we delve into the world of impactful business leaders who are setting the bar high. Worthy for 30 carefully curates its guests, engaging with business trailblazers who embody the ethos of doing good while doing well. In each episode, we extract actionable tips and wisdom from these visionaries, offering you a blueprint to merge success with social impact. Ready to elevate your business game? Let's dive in and learn how to do good while thriving. Worthy for 30, where purpose meets profit. Welcome to another episode and conversation on the Worthy for 30 podcast. I am your host, Eric Tash. With me today is angel investor, author, and podcast host, Marcia Dawood. Marcia, welcome to Worthy for 30.
Thanks so much for having me here.
Absolutely. And it was, I love serendipity. I love, as you can probably attest to, you put out great work, you're trying to help people and people start to notice. And one thing I'm very grateful for is you noticing one of my podcast conversations with Alyssa Calver, the founder and CEO of WeGotThis.org. You reached out, you said, hey, by the way, I have a book, Doing Good While Doing Well. Love to talk to you on your podcast about it. And I know we have a lot to get into, but would love to just understand, at least the audience would love to understand. First, you're an angel investor. As I mentioned, you're a podcast host, you're an author. Break down for the person who may not be well informed about angel investing, what angel investing is.
Sure. So angel investing, simply put, is when somebody uses their own money to invest in an early stage company. So usually they're using their after-tax dollars to help a startup. You might have heard, those words before. A startup, though, just basically means that it's a company that's very early stage, but has this potential for scalability. And that's really what angel investors or very early stage investors are looking for. It's a risky asset class. We're not really sure which companies are going to make it, which ones aren't. So we're looking for that ability to see that hockey stick, kind of growth.
Excellent. And you've been angel investing since 2012?
Yeah, quite a while.
Quite a while. You've seen a lot. You've learned a lot, I imagine, over those 13 years. And you didn't start, your career didn't start in angel investing and working with startups. You were working in corporate America at Kaplan. So can you tell us about how you made that transition from working in corporate America to working with startups?
Yeah, so I was just kind of doing the same thing, expecting different results like every day, kind of like a lot of people do in corporate world.
Right.
And I got invited I was living in Pittsburgh, Pennsylvania at the time, and I got invited to an angel investing meeting. And I thought, oh, cool. What's that? No idea what it was. And I thought maybe we're going to talk about the stock market. I really had absolutely no idea. But I went to the first meeting and I saw 3 entrepreneurs presenting their ideas and their companies to a group of potential investors. And I thought to myself, have I been living under a rock? I mean, where have I been? This stuff is really cool that they're building. And it's right here in my own backyard. I thought this only happened in, Silicon Valley or New York or like big cities. And I thought you had to be super rich and I thought you had to be invited and you had to know people. I'm like, who am I? Like, who am I to be an angel investor? And people were like, no, this happens in every city, in every town. And there's some people that just need to get behind these companies so that they can grow and help to create a lot of the innovation in the world.
And from that meeting or from that event, then it just took off, that you started to lean more into how can I work with more entrepreneurs? How can I angel invest? How can I invest just in general? Because I imagine, again, I'm assuming that a lot of these entrepreneurs are working on things that, as you mentioned, cool and innovative, they're solving problems that the world wants to have solved. So love to, again, understand that progression from that one meeting to where you are today.
Yeah, well, I always believed like, hey, be the change you want to see in the world. And I think, yeah, that's awesome. I want to be the change. But wait a minute. How do I do that? How can I, as one person, make change? And I thought that was like donating to charity, which is an incredible thing to do. And everybody needs to do that. But the amount of annual charitable giving in the US, it's about $475 billion, which is a lot of money, $475 billion. But that's equivalent to the amount of about 1% of the value of our US stock market. So if we really put all the burden on these nonprofits to create all the change in the world that we want to see and all the innovation, that's not fair. First of all, we either need to really, really, really fund them a whole lot better, or we need to start to look at for-profit companies too and invest in them when they're small and help them to grow. So that's really what got me kind of motivated about wait a minute, when I started to put all of this together and also realize how little funding went to women, people of color, and other underrepresented groups, I thought, wait a minute, we need to change this. And the way that we change it is just to get more people to know about it.
More people to know about it. Yeah, it goes back to this, this through line of the conversations, Marcia, that I've had with other, entrepreneurs, nonprofit leaders, is accessibility. So
Right.
to your point, how do we put a spotlight on the resources? So for that person who's listening to this conversation and they're saying, oh, wow, Marcia, she went to this one networking meeting. She met 3 different entrepreneurs. What is angel investing? Can I do this? Yes, I can do that. I don't need that much money to start. But it all comes back to, how do I educate myself? So
Right.
what are those steps? Like, again, you have a book, you have a podcast, you're an angel investor, you work at venture firms. So to that person who's posing that question to themselves, how can I get more involved? Like, where do they go? Is it to that, their chamber of commerce, to go on LinkedIn? I imagine there are a lot of free resources at people's disposal. Would love to know what that first step would be if someone asks you, where do I go to learn more about angel investing?
Yeah, so it is a lot, just like you just mentioned. There's all kinds of things that are going on in this early investing world. And so how do you kind of decipher that and get through that? There's a lot to demystify there. And that's really why I started the podcast, The Angel Next Door, and why I wrote the book, Do Good While Doing Well, because I felt like I've made a lot of mistakes and maybe I should tell other people, don't do that. Don't, do this, but don't do that kind of thing. But to your point about the Chamber of Commerce or where to go, there are angel groups pretty much in every city, in every town. There are startup events, there are entrepreneurs. So literally, you could just Google startup events and then just fill in your city or town, and you would get to know kind of what's going on in your own backyard. And it's amazing how entrepreneurs and people who are interested in entrepreneurship kind of all flock together. And that's a great way to learn and get started.
That is excellent, because to your point, what you said earlier, can I do angel investing? I don't live in Silicon Valley. I don't live in New York. Now,
Right.
Austin and Boston are big cities where investing is happening, and they're incubating a lot of different startups in those cities. But to your point, again, it's entrepreneurs and investors, working in packs or flocks. So, and I imagine now with all that information is being democratized. And again, if you live
Yes.
in a small town in middle America, you can still, again, have the ability to go online and to see, again, where are those groups? Are there people who are thinking along the lines that I'm thinking of, in terms of starting businesses that want to congregate, that want to talk, that want to share ideas? And it goes back to that, again, those first questions that you asked yourself or posed to yourself when you started to get more interested into angel investing is, can I do this? So what do you say to that person who's like, I don't know, like has that imposter syndrome, or perhaps has that fear factor? Like, how'd you overcome that? How'd you work through that to get to where you are today? Because again, you mentioned there's a lot of trial and tribulation, and let a negative or unpleasant experience prevent you from continuing on. So, love to hear your advice.
Yeah, well, back in the day and even before 2012 when I got involved in it, but
Hmm.
it was, you did have to have a pretty big chunk of money in order to make an investment in an early stage company. But so much has changed in the last 8 to 10 years because the SEC changed some of the rules and now allow companies to fundraise through what's called equity crowdfunding. Basically, what that means is some people have heard of Kickstarter or
Hmm.
Indiegogo or even GoFundMe. Those are ways to either get rewards based or donation based um, crowdfunding dollars. And
Hmm.
those are great for a lot of things. But nowadays, you can invest as little as $50 and you get a small piece of ownership into the company. Now, again, for $50, you're probably getting tiny, 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 tiny
Right.
amount. However, I look at it like it's a great way to learn. It's a great way to learn and not have to put up tens of thousands of dollars or whatever it is in
Mhm.
order to invest in a company. So there are 3 equity crowdfunding platforms that have the majority of the market share right now. So even if you went to Google, this is what you would find. And
Mhm.
it would be WeFunder, Republic, and Start Engine.
Mhm.
So you could just pick one of those and you could kind of just peruse whatever it is that you think looks interesting. And you will be able to learn a whole lot just from kind of looking around.
That is amazing. And again, just $50. And to put that into context, I think that happened under the Obama administration, right, where they lowered
That's
the
exactly
threshold.
right. The
That
Jobs Act.
the Jobs
Yep.
Act, right? So before you had to be an institutional investor. So how do you define an institutional investor, which was the old way of being able to invest in a into a startup, to now again just having $50 to invest in a startup?
So an institutional investor would really be like a bigger company, like a pension fund or something like that, or a venture capital fund. You're referring to is called an accredited investor, which
Accredited
basically
investors,
means you
yes.
have a certain level of wealth or income.
Mhm.
The terms are like so close, so close to so many things. With that, you do have to have a certain level of wealth or income. And right now, the definition as it stands is that you have to have $200,000 in annual income, 300,000 if you're including a spouse, or you have to have $1 million in net worth minus your home. So, in a lot of cases, people aren't meeting that definition, which is fine because equity crowdfunding allows anybody to do that. So, it's a way that people can get started. I especially really like it for people who are younger and maybe don't have that type of wealth or income yet, but
Mhm.
they could down the road. And I wish that I had known about this when I was 25 years old and I could have started to look at the potential things that I could invest in. And maybe I do put my $200 in,
Mhm.
instead of going to out to dinner one night, I put, for a week, I eat in so that I can have a little extra money and then be
Mhm.
able to invest in through a equity crowdfunding site. And it gets you to start to learn a little bit about it. But like I said, you can even look around. You could make in my workbook that goes
Mhm.
along with the book, I have a mock portfolio type of exercise people can do. So you really don't have to put in money at the beginning. And we
Mhm.
always recommend that people learn first.
So that workbook is really to learn the ins and outs, the 101 before you start investing in equity
Exactly. Yeah.
crowdfunding. Okay.
Yeah, because I think people also need to think about it like, well, wait a minute, what money am I going to use for this?
Mhm.
Because I think about it anyway, like in buckets. You have your money
Sure.
that you need for everyday spending, and then you have your savings, and you have hopefully some investments that you're making down the road. So where are you taking this from? And I have some exercises that people can do, and also being able to talk to your spouse or family about it as well.
Okay, excellent. And then once you get through the 101 and really learn and then start putting money into some of these startups through these equity crowdfunding sites, what sort of access do you get to that startup, to that entrepreneur, to really understand, again, look under the hood, of course, in the financial metrics. How well is the startup doing? Are they hitting their core KPIs? But in terms of like really, understanding, who this entrepreneur is, are they mission driven? Besides just creating an incredible product and service, are they also servicing the communities that they're trying to serve? Again, because you mentioned making a positive impact in the world through angel investing, helping shrink that funding gap for female entrepreneurs of color. Again, what sort of access versus again the old school model?
Yeah, so I think it really does depend on the company. But like the one example, if you used equity crowdfunding, you're going to be able to get kind of a behind the scenes look. And in some cases, they'll even give perks along with the investment, just like you would see on a Kickstarter and Indiegogo. I know, for example, I invested in a company and at my perk level, which wasn't a lot, I got a 1 year subscription to, the thing that they were building, which was pretty cool. It was a nice perk. So I got to try it. I got to try it like and get some of the updates kind of before other people did. So that's pretty neat. But let's say that going back to our previous example where maybe somebody found something that was going on in their local community and
Hmm.
they met an entrepreneur. Sometimes even before they become an investor, potential investors can become advisors and they end up working directly with the company and helping them with things like opening doors for networking or giving them maybe some advice on hiring. Or it doesn't have to be like, oh, I have to be a lawyer in order to be a mentor. No, entrepreneurs need all kinds of help in all kinds of ways in order to grow their businesses. So it's really helpful, especially when the local community gets involved and kind of gets behind the entrepreneur.
No, that's super interesting because I always hear this expression 0 to 1 when you're starting a business or starting a company, right? And that 0 to 1 is okay, incorporation, opening up bank accounts, some of the things that you really don't think about because again, it's social media curates, the glamour and the glitz of being an entrepreneur. It's like, oh, look at me, I'm a startup entrepreneur. But when you really dig and really see again a lot of the important steps that need to happen in order to get to that point. And again, being on social media and being a startup founder, again, they're not mutually inclusive, but there's a lot of hard work that needs to happen. And having those mentors and advisors again is super crucial and super vital. It sounds like, which is excellent. Without again making a huge monetary investment. Again, you're advising or being a mentor, and I imagine there could be some sort of arrangement, right? Like advisor shares or some
Yes, absolutely. Yeah.
so that person feels invested in some cases. And so, Marcia, you've invested in what was it, 50 companies or 50 startups?
Well, direct investments, I've done some of that, but I've also invested in funds. And I'm
Mhm.
a huge fan of funds because you get a diversified portfolio by writing one check. So a fund is essentially managed by somebody else. I don't make this decisions, although I have been a fund manager before, but let's set that aside for a minute. The fund manager is the one who's making the investment decisions, but there's a thesis. Like, for example, have invested in funds that are specific to investing in female founders. So the person who's the fund manager ends up making the decisions about how many companies and what companies get funded. And I really personally like that because it does take a lot of bets that you kind of have to make, or a lot of, at bats
Mhm.
before you're really sure that you're going to hit a home run. So, and there's a lot of singles and doubles that can come up along the way, but trying to get to that company that's going to be able to make a decent and probably hopefully big return financially, well, you have to place a lot of investments in order to do that. And for a lot of people, you can't make $10,000, $20,000 investments in 10, 15 companies. It would be crazy money,
Mhm.
right? So
Sure.
how do you do that? And nowadays it used to have a lot of money to get into a venture capital fund. But now there are a lot of funds out there that you can invest even $5,000, $10,000 and get instant. I shouldn't say instant because it happens every time that the investments are made, but that
Mhm.
one check will give you access then to have in your portfolio, let's say 10, 15 investments that now you've just spread your risk, because it is a risky asset class because it's illiquid, meaning you can't get to the money right away. It's not like a public stock where you can go onto E-Trade and you could buy it and then 5 seconds later, if you turned around and sold it, you could do that. You can't do that here. So you have to be careful. At the Angel Capital Association, we always say only use like 5, maybe 10% of your investable assets in order to put into this asset class. But in order to do that, that means you really have to think about how are you going to diversify.
Mhm. And then in terms of finding that fund that's willing to take that $10,000 check, similar question, is it through networking that you find those funds, or making it publicly? Are they making public announcements and saying, hey, we're looking for, this type of investor who's, and again, willing to make that risk, but not to invest so much money than in comparison to other limited partners or those institutional investors investing in venture funds.
Right, exactly. So it depends. In some cases, you might see things that are out on social media talking about it, but there are rules around that. So it would have to be
Mm.
a very specific type of fund to be able to do that. And I don't want to bore everybody with all those SEC details, but you can usually find them through networking, like you said. And in a lot of cases, it goes back to what we talked about earlier. Just start to see what's going on in your local community, and there will be people who are more experienced in your local community that then will tell you and kind of show you a little more that's going on nationally and regionally.
And now transitioning to again, you're investing in funds or invest in female founded startups. What is your criteria? Again, you're cutting the check. What is your criteria for that GP, for that general partner, to make those investments? Like, what are you looking for in them to then make those right bets, quote unquote? And then two, it's actually two separate questions. in terms of the impact. I've spoken with Karen from My Fund Women. I've spoken with Carrie from the Whisperer Group, who are working with female entrepreneurs to shrink the funding gap, to help them maximize their exits. We'd love to, again, one, understand the criteria and understand the impact that you're seeing, based on your investments.
Yeah. So as far as criteria, many of the fund managers that I've invested in are people that I knew and I had gotten to know over a period of time. Just like anything, you don't have to write a check or be an investor right away. You can get to know people, figure out what you like, what you feel comfortable with. But I feel like the people that I've invested in the past, I was aligned with their thesis. So yes, part of it is about investing in, in this case, women founders, but also what are the female founders doing? Just because you're female doesn't mean you should get investment, right? So, or anything like that. So how do we decide, what is it, what types of companies, where do we think there's going to be not just financial returns, but to your point, where is it going to be impactful? So to answer the second part of your question, I have kind of a love-hate relationship with the word impact. Okay. And I say that because I do believe that you can make an impact and also make a financial return. But in a lot of cases, there's this kind of connotation about the word impact that means, well, if you invest for impact, then it's more like just giving your money away. And I don't believe that that's true, but in a lot of cases in the past, there weren't a lot of options to invest in impact funds or impactful companies without it being kind of a write-off or some type of a charity. So I think we're going to start to see more and more studies come out and more results coming out to prove this point that you can invest for impact and you can still make a financial return. But there haven't been enough companies doing that yet that were labeling themselves that way, and there haven't been enough funds yet. So I think it's going to start to come out more, but it's just going to take a little while.
Gotcha. Yeah, because I see the stats. I think it's PitchBook. What was it? 2% of all venture funding, I think in 23 or 24 went to female founded startups. That number is even smaller for people of color. So yeah, definitely. Of course, want to help shrink that gap. But to your point, it shouldn't be thought of as, I'm investing for impact while, the tertiary objective is to make a return. No, they can happen at the same time. I think to your point, you're trying to speak to that misconception that these things are mutually exclusive or they're competing with one another, which is very clear. And in terms of, some of the investments that you have made, have any of those investments really stood out, both from a financial return and also from an impact standpoint?
So I actually tell the story in my book about how it's now the very beginning of 2020 before we ever heard the word COVID. And I'm having a conversation with one of my angel friends and I was like, I don't know about this angel investing stuff because where are the exits and how come it's taking a long time? And he just kind of laughed at me a little bit and said, hey, just wait. And sure enough, even with the pandemic in 2020, 6 exits happened either within a fund that I was an investor in or a company directly exited that I had been an investor in for a while. One of them was the very first check that I ever wrote. And that was interesting because it was a part of the tax code. I got to take advantage of. There's several tax benefits for entrepreneurs, and that includes investors. And I was able to get a gain, and with that gain, I did not have to pay any taxes, no capital gains tax, no income tax of any kind, because I'd held the stock as an investor for over 5 years. So I have podcast episodes if people want to know more about taxes. I don't want to put people to sleep. But that was a really interesting experiment that I got to go through. And I was like, wow, this really does work. And then the whole point is that the Congress put it in place so that people like me would get a return and then we would turn around and reinvest it back into the economy and invest in another company, which is exactly what I did.
That's amazing. Yeah. Just have that cycle of reinvestment, to fund those companies. Cause as a byproduct, I imagine, the companies, whether they're direct checks or through funds, they're creating jobs. It's not just a one person shop. They're creating jobs. Like, do you have any like reference or context in terms of those, the companies that you invested in via funds and direct, that number of jobs that have been created as a result of those startups, again, flourishing?
Oh my gosh. That is such a good question, Eric. And you know what I did one time is I actually started a spreadsheet where I was trying to figure that out.
Mm-hmm.
And it was so hard to try to figure out because I don't know some of the details. I don't know exactly. These are private companies, so all their
Yeah.
information isn't all over the internet, just like public companies are. However, I got to a point where there were hundreds of jobs that were created between, I mean, just like adding up what I knew.
Mm-hmm.
And that to me was just so empowering because I thought to myself, that's one of the intrinsic benefits of being an investor is when you see a company and you become an investor and let's say the company only has like 4 employees and then you watch it grow to over 100 employees and you're thinking to yourself, oh my gosh, I was part of that, even though I didn't really do anything other than I was an investor. Maybe I was an advisor at some point or whatever, but even if I wasn't, I was still a part of it. And that to me is like huge. And just to see all those jobs get created. And I thought to myself, oh my gosh, this is so awesome.
It is awesome to see, again, the startups grow, whether you're an advisor or you're investing, because then there are alumni associations that come out of it. I worked at Buddy Media about 15 years ago, and I'm writing in Cycle for Survival, to raise money for rare cancer with Memorial Sloan Kettering. And we're running as a Buddy Media alumni group. And there are different teams from the Buddy Media Alumni Association. And it's because, again, the startup and the investors, they had their value is aligned. How do we, of course, create jobs, but how do we invest in the culture? How do we, yes, we're creating, a great product, but how do we give back, again, making that impact, on the communities that we serve? One of the things that we did, there were give back days. Again, there were Cycle for Survival, different ways that the co-founders really impressed upon us that, yes, we're working with, large advertisers on social media. At the same time, we can also make an impact in the communities that we serve. And because of that, again, we have that tight bond. So it's great to see, again, the job creation. It's also great to see some of these startups, seeing their alumni continue on. Because I imagine too, again, this is just an assumption, as you're reinvesting your dollars, do you start seeing the same or familiar faces again and again and again? Whether they're the founder or they're a co-investor or an employee or on the ground floor?
Sometimes, yeah. I mean, a lot of times investors especially like to flock together when they
Mm-hmm.
know each other because we don't have all the answers. We don't have all the expertise to be able to evaluate every type of company. Like, for example, I love healthcare companies. I love it when
Mm-hmm.
people are trying to solve all the problems and make people healthy and keep them safe and keep them from getting, diseases and things like that. But I'm not a scientist. I have no business evaluating healthcare companies because
Right.
I do not know what I'm looking at other than I could look at the business side and things like that, but I don't know the science. So I need to surround myself with people who do know things like that. And that's where the magic really happens with angel groups because you get those people who have the expertise and then some people have different expertise and you kind of bring it all together and it's really a fun way to not only get to help a company but also get to know and make new friends
And make new friends, right? And sticking with the healthcare theme, healthcare seems to be on a lot of people's minds. In terms of demystifying, like what are some of the challenges that the startups that you're investing in are trying to tackle as it pertains to healthcare in the US?
well, definitely women's health. So
Okay.
if you think about it, up until even not that long ago, it was thought of that women were just little men, which is not the case, obviously, right?
Mm-hmm.
So all of this clinical trials, studies, even like think about a bottle of aspirin. If you go look at the dosage on a bottle of aspirin, it's going to tell you and I that we have the same dosage level. But I'm small and you look like you're a little bit of a bigger guy, right? So
Right.
we should not have the same dosage. But that's
Mm-hmm.
just such a small example of what is going on in our healthcare system. And if we can start to get more people looking at women's health from a different angle, then I think we're going to also start to see men's health at a different angle. And overall, we can help everyone.
Mm-hmm. No, that's excellent. Yeah, because I know, like, from a hospital, doctor, insurance, consumer, again, connecting those dots, there's a lot of or the opacity. Again, there's very limited, in terms of transparency, what happens behind the scenes. And I've heard of, and again, it's a regulated, industry. Again, to your point, I need to find out who I should be talking to. But it's, again, connecting those dots, providing that consumer, again, the person who's receiving care, as much transparency in terms of what goes into their treatment, in terms of the drugs or prescriptions that are being prescribed, in terms of how the doctor is being compensated and the hospital is being compensated. A known fact is that a lot of all the insurance companies in the United States are publicly traded companies, so they have a fiduciary responsibility to their shareholders. So understanding, again, some of those dynamics, those financial dynamics for the consumer, I think can make life a little bit more digestible, hopefully. To understand, okay, this is what my premium, this is how much I'm spending, these are my copays, and this is the cost of, again, of these treatments and drugs that I'm receiving. So I imagine there's startups that are trying to tackle, how do they provide as much transparency in the U.S. healthcare system as possible?
Yeah.
So it's becoming a huge challenge. Marcia, in terms of the Angel Next Door podcast, have there been any episodes or conversations that have really stood out to you with regards to angel investing, and again, with this this whole concept of investing in impactful startups at the same time driving those returns for investors?
Yeah, well, I started the podcast, and hence the reason that's called The Angel Next Door. I was doing a play off of the book The Millionaire Next Door, because I was trying to just showcase people who were your everyday kind of person who turned out to be an angel investor. How did they find out about it? Why did they do it? What are they expecting? What's happened in the past? All those kind of things. So that's how it started. It was basically me just interviewing my buddies, my angel buddies. And then I started to realize, wait a minute, there are so many things that I could be talking about that could help educate people. Like, how about equity crowdfunding, for example? So I brought on at two different times entrepreneurs that had raised hundreds of thousands of dollars using equity crowdfunding so they could explain it. And not just to me and other investors, but could explain it to other entrepreneurs about maybe how they could do it. I've had 5 U.S. Congress people come on the podcast and talk a little bit about how they feel about entrepreneurship in their cities and towns. And 2 of the SEC commissioners have also come on. Then I started to do things like talk about women's health more, talk about using philanthropic dollars in order to invest in a for-profit company. So a lot of it has kind of morphed into not just who can be an angel investor, but how anybody can be an angel investor. And here are all the ways. And if you do feel like this is something that you're interested in, you can pick and choose kind of where you want to find out more so that it resonates with you. So I had some people that would be like, hey, you said you had some episodes on equity crowdfunding. Okay, well, what are they? And then I'd have to like sit there and kind of name them, that's not a very good way to do it. Right. So I now have playlists on my website. So people can go if they're like, oh, I want to learn about investing with philanthropic dollars. So they can listen to those couple episodes.
Okay, excellent. And Marcia, the website address, and I'll include this in the show notes if anyone's interested.
So it's just my name, Marcia, Marcia, Dawood, DAWOOD.com.
Okay, excellent. If you want to find anyone wants to learn more about angel investing, again, and those specific topics, go to Marcia's website. Marcia, I'd like to close our conversation with prognosticating what's going to happen on the over the horizon. I know we're in a new administration. Again, we're 3 weeks into this new administration. What is your prediction as it relates to angel investing over the next 4 to 8 years, let's say?
Yeah, I mean, so much. First of all, it's come so far in the last 8 years after the deregulation and allowing of equity crowdfunding. But I did recently have a podcast episode with Kendrick Wynn, who is the CEO of Republic.com, one of the equity crowdfunding sites. And at the end of the conversation, you have to listen to the whole thing because I did get him to talk about democratizing the private markets. So let's just say I could wave like a magic wand. Obviously, you can't do this right now, but think about it. Back in the day, when people wanted to trade a public stock, And I'm talking like in the 80s and 90s.
Yep.
They would have to have a broker. You'd have to have an account. You'd have to have it funded. It would take days. Somebody would have to do all that, right? But nowadays, what can you do? You can go right on to like Robinhood, E-Trade, any platform that trades public stocks. And you could literally in 3 seconds, you could be trading. And then let's say 5 minutes later, you were like, oh, I didn't want to do that. Let me just change it. You can do that too, right?
Right.
So I think that if we could do something like that around the private markets, now I know the SEC would need to regulate all that, and there'd be a lot of things, transparencies and all kinds of stuff like that, which is great. But imagine if more people could actually participate in the private markets, and I think that's something that we're going to see that democratization happening more and more over the next couple of years.
Very interesting. Very interesting. Because I know the Biden administration, this is different. This is more from the crypto standpoint, was very anti-crypto. Seems like the Trump administration is embracing decentralized currencies and crypto. It'll be interesting, to see that in a similar vein, again, from the private markets, for anyone to be able to invest in a startup, hopefully with the ease of like an E-Trade or some other, or perhaps maybe it's a ledger where you can make those type of investments. That is super, super, super interesting, and perhaps not maybe not too far off. We'll have to see. We'll have to wait and see.
You never know.
We'll never know. Right. Yes. So Marcia, again, it was a pleasure having you.
Thank you so much.
A great conversation about angel investing. I will include the website. Where else can people follow you or learn more about the work that you're doing?
Yeah, LinkedIn. I'm very active there. And then people can also go to the angelcapitalassociation.org. That's their website that has a lot of resources, education, all kinds of stuff.
Okay, excellent. Well, I'll include all those links in the show notes. Again, always a pleasure, and we'll talk soon.
All right, great. Thanks, Eric.
Thank you. Thank you for joining this episode of the Worthy for 30 podcast. Stay tuned for more insights from impactful business leaders. Don't miss out. Follow us on all podcast platforms to catch every conversation.